Hey everyone, this is Jackie Cooper with the Blockchain Legal Institute talk show, and today we are going to be talking about stablecoins and what has been going on in the news, as well as everything else historic. I have a good friend on today, Jack, who is the creator of ARYZE, and we're going to be talking about the history of his company and also about what's going on in the world within cryptocurrency and within the stablecoin community. So, Jack, how are you doing today?
I'm doing good. I'm doing great. We were just talking about that it's impossible to follow the stablecoin news, right? It seems like there's a constant new amazing update or IPO or something or government doing something. It's fun to be a part of a evolution,
Yeah,
revolution.
especially yeah, evolution, revolution, a change. Again, currency, traditional currency has existed, but also has evolved over time from a barter situation to, coins to governments to individuals. So, money and how we transact is always changing from both physical to digital. So, again, as the technology changes, people get very creative on how they want to kind of move funds around. And we've seen that from, the paper money, the coin money, to the credit card, and now to the, currency side from the cryptocurrency side, which is digital. So stablecoin, we were
But
talking.
Jackie, it's the first time though, I think, maybe not the first time, but it's money changes, but
Mhm.
the face of Caesar stays on the coin, you know? A- And and what blockchain and Bitcoin enabled, right? And the technology enabled is the tokenization and creation, the tokenization of different assets and products, and the creation of new assets and products, right? So if Satoshi was public, the creator of Bitcoin, the kind of anonymous, pseudonymous creators of Bitcoin, um, if they were public about it, they will probably be stopped, like everybody else that tried to challenge the mighty dollar. Um, the challenging of the dollar, the challenging of Caesar's face on the coin was often stopped. But then came blockchain, and then grew blockchain, and then grew the compute of the networks that drive the cryptocurrencies. These blockchains became very strong. And at some point, it changed. It became too good for TradFi, for the established world not to use. Kind of like AI, right? You can't, there's still banks here in Denmark that doesn't use it, or insurance companies that doesn't use it. And it's like, no, we can't, GDPR, instead of let's understand how we can, right? So
Mhm.
you can't just close your eyes and ears. And with blockchain, if you don't use the strength of Web3 as a Web2 institution, you will be obsolete. You will be irrelevant. And that's why all major institutions are now swimming in these waters. But these waters, it's our lake, it's our ocean. That's the point. It's not Caesar's ocean. That's what's unique about this, right? It's a new lake that Caesar wants his boat in. And that's what we're seeing with stablecoins from the US, where the king creates a coin and says, all right, I also have a boat in your waters. Sure, but it's our waters. But the dangerous part is the established players want to claim the waters, right? And with stablecoins, it becomes very muddy because it's a very, very important component of this entire game, right? And the volumes behind and the establishment behind those volumes behind, it's very, very muddy. Um, but sorry, Jackie, it
It's
was just to
okay.
say
It's okay. I'm glad
this
you.
is it's the first time that money changes in a direction not set by the king.
Right, right. So, we're going to be covering for those that are, hopping on listening, because this is going to go out right away because this week is called Crypto Week in the United States because of the various laws that are being looked at. In fact, they might even be voted on today, which is Tuesday. So it will be very interesting to push this out and to have people listen to this. We're going to be talking a little bit about the history of stablecoins, but we're also going to be talking about, how you got in, how we met, but also I want to talk about also national security and stablecoins and the difference between stablecoins and CBDC. I went to a different event with the Digital Chamber last week about blockchain and national security, and it raised some questions in my mind about how we're building different technologies and how individuals who don't have necessarily good in mind can turn off currency if they have the control, which is centralized. And to me, that is also contrary to the DeFi community's philosophy of the economic freedom that we stepped into this for. You're talking about, being on a lake, in terms of the control. So let's talk a little bit about the history of stablecoin. I know you and I were talking about that, and I'm laughing that you talk about AI because I was using AI to try to find a little bit about the history. And it looked as if, the first stablecoin started, in 2014, around the time that, the idea of using Bitcoin with USD. It looks like, according to this, 2014, there was BitUSD created by Dan Larimer and Charles Hoskinson. So, what is your knowledge of the history of stablecoin, and how did you get into it?
Around the same time, in 2013, I got into Bitcoin, and I kind of was amazed by the concept of being able to move things around via code. Remember, this was back in the days. It was not easy even creating like an online web shop, or you didn't have all these pre-built websites, and if you wanted to have a checkout mechanism, you needed a PSP to give you a solution. It wasn't elegant, right? And uh, I was involved with innovation for this early startup, and I got into Bitcoin very early on. And after a while, after promoting Bitcoin and working on Bitcoin for a number of years, earning the nickname Bitcoin Jack because I ventured into living 1 month only on Bitcoin back in 2015, which means I'm the probably the proud owner of one of the world's most expensive tattoos and taxi rides and whatever else, oh, oh, Jackie, I'm so sorry. My phone is calling, so this everything just messed up. I hope you can.
You're fine. You're fine. Keep going.
I just put on do not disturb here so it doesn't pop up again.
That's okay.
Yeah, so I got interested in Bitcoin early on, joined a crypto company, and then long story short, I was leading the innovation lab, basically building all kinds of solutions on top of the Bitcoin blockchain. And while the BitUSD was a dollar coin on the Bitcoin blockchain, we were kind of looking at the same idea just from a Danish krona perspective. So we took like 0.00000 whatever satoshis, a small amount of a Bitcoin, and inside the transaction itself, we could store data, right? And that data, when you sent it from one wallet to another, it would then be stored in the transfer. So we would use Bitcoin as the transfer mechanism, but the data we stored was basically stable coins. Like this is a 1 krona coin. This is another 1 krona coin. This is a 1 krona coin. So we could use the satoshis, the small elements of 1 Bitcoin, as early NFTs, because these were non-fungible. If you had 0001 and you had another 0001, these were different, right? These were different from each other. So we could make like 1 kronas, 10 kronas, 100 kronas transfers inside the Bitcoin blockchain.
Wow.
You could theoretically transfer any amount, right? It was early days, early stablecoin days, and from there, stablecoins evolved, and then it became, and it's still evolving, right? But in the early days, it then evolved into, people might remember the Luna crashes and some of the algorithmic stablecoins that also did not succeed in that era. Some might remember, the Binance USD that came and went, and some remember the shenanigans of Tether in the earlier days. Then came the Circles of the world, and stablecoins are ever changing. What I did was I left my position at that old crypto company and I started ARYZE with the mission of making dumb money smart. I said, you know what? I don't care about forcing my coin onto you. If you're a guy in Denmark and you use Danish krona, let's give you an e-krona, like a version of what you already have. Whilst all the others were trying to push a dollar coin into me, I'll say, hey, use this dollar coin. Why? I'm European. I'm in Denmark, right? It's not easy doing the quick math every time I got to pay for something. I just want to use Danish krona. Can we just make dumb money smart, like money in the bank? Can it just have that superpower that crypto money does? Mm-hmm. That was the mantra. That's been the mantra. So we started launching coins, e-euro, e-dollar, e-pound, later on e-gold. We're adding e-silver. We just created a Canadian stablecoin, Japanese, so we can support many currencies and issue these, smart money tokens across the world. We also build a unique engine that lets users issue their own branded stablecoin. So kind of, if you imagine, if you're Netflix and you want to make a Netflix coin, you don't want to deal with becoming a stablecoin institute or an issuer, right? You just want to use some APIs, plug into the service, get a coin, start using it, not worry about the backing and the solvency and the auditing and all that stuff. So that's what ARYZE has built. We built a tokenization engine that believes we're going to see thousands of different stable coins, like, for example, a Netflix coin or a Visa credit or whatever you want to call it. We want to be the magnet strip, not the credit card. So when I see new stable coins getting a niche, or a project in trade finance or logistics or shipping is getting momentum, I'm not frightened by that. I think that's amazing, and try to figure out how can I deliver the tech for these guys, because people don't want to do what ARYZE has done. Right? They don't want to spend half a decade building a compliant legal institute that can in fact issue these, regulated assets across the world, right? Mm-hmm. Like you don't need to be a bank to build an app, right? That's the idea. So we made it easy for people and institutions to tokenize holdings and create custom stable coins, and we're seeing great momentum on that. The other side of the world, we got the Tethers and the Circles and the Ripple dollars and the kind of TradFi stable coins, which is, of course, the ships that are sailing in our waters, the TradFi ships. They're pretty big. And now they started putting out borders, like saying, oh, you can't come in here. Or if you want to come in here, we need to know who you are. So, or a different analogy, they dug their own lake using the same principles, and they're saying, hey, come over to our lake, but you got to tell us who you are and stuff like that, which is fine. That you can't expect the entire human race to just use an anonymous Bitcoin thing, right? Let's be real adults about it, right? And so there is an evolution happening. TradFi is getting more and more involved. ARYZE will support that. We have support for Ethereum, and we also can issue tokens on Concordium. Concordium is exactly what the TradFi world requires in order to actually tick off the boxes that the different financial ministries and financial authorities mandate them to take off
Why is that?
about AML. Well, because you got to deal with AML and KYC and checks about like the infrastructure. You got to deal with ISO standards. The real world is, since got to run according to the practices that are decided in law. So yeah, you can have some technology that makes things easier, like for example AI, but you still must adhere to GDPR if you're in Europe, right? So we have to figure out how do we actually make a real world difference, and not just our evangelists for Bitcoin. Um, it has its place. Ethereum has its place. Concordium has its place. And if you're a government institute or if you're a municipality or something, right? You can't just use any chain or any system or any coin. Like, oh, why don't you use Tether on Ethereum? I mean, where to begin? Where to begin with you just using Tether? And then on Ethereum, is there's so many mismatches between the regulatory requirements that will be placed upon this municipality. But on the, it's an ever-changing thing. I've been a part of it for a decade, and I'm excited to follow this growth in this technology for the next several decades to come.
So let me ask you a question. For those that don't understand, what's the difference between stablecoin and a CBDC?
There is no difference. The difference is the issuer who creates it. And in fact, I would go as far as to say that the biggest stable coins, let's say USDC, it is a CBDC. It's not issued by the state, but it's absolutely in every way controlled by the state. Backed by dollars, kept in the treasury, issued by the US, follows US law. They can freeze it as they want, right? I think they, so if it quacks like a duck and walks like a duck, it's probably a duck. But we like to not think of it like that. In my view, it's just an expression that's going to die over at some point. Like Trump saying, we're not going to have CBDCs, yet you have the biggest CBDCs. It's just a bunch of double speak, whatever. It doesn't matter. For me, CBDCs are the cool stuff that I'm working on across, nations in Africa, across Southeast Asia, the concepts that I'm involved with and also reading about across Latin America, where governments are trying to tokenize the ground they stand on, the gold in the soil, the value, the lithium, the cobalt, and trying to use that value in a much more transparent and honest way, and eventually as a way to support growth in their own nation. Like an African country mining and exporting a lot of gold can utilize that gold to create better payment system across its citizens and across neighboring countries to have better cross-border payments, not being dependent on SWIFT and SEPA and IBANs and banking rails and the PayPals of the world, right? But starting with a new lake, right? Starting over.
Explain the tech behind it. You were talking about the product like gold or silver or, even dollars or other, fiat of other countries. How does a stable coin work from the backing of it, the liquidity of it? Because that's also been, people who've gotten, other than Bitcoin, people who've gotten into the altcoin crypto side, they hear this term of liquidity and rug pulls. And so how does a stable coin work? What's behind it? And why does it make it more secure or stable?
Let me start by saying how we do it.
Okay, perfect.
And then give you kind of variants of that, right?
Okay.
Because what we do is simple. We have a one-to-one backing. So meaning if we have one euro, there is €1 behind it. Now this euro you can keep in a bank or an e-money institute, but they can all go bankrupt. So if they go away, the money gets lost. You don't have insurance on outside of FDIC insurance, which is for private individuals. You don't have any bank guarantees on your deposits in the bank. So we said, all right, where do we then put it? We keep it in the central banks. because they're the only ones who can keep printing money as much as they want. All right. Is that weird? Sure, but that's how the world works. So how do you keep money in the central banks? You can either get a bank license and do deposits into the, for example, ECB or the US Fed, or you can buy treasuries, right? You can invest in treasuries. So we buy short-term government-issued bonds. So let's say we issue $100, we buy $100 worth of T-bills, ultra short, simplified. So we keep things one-to-one, but nobody knows us. So people need to trust us. And you can't ask people to trust you, so you got to prove it. So we got Grant Thornton to do our audits, which is quite unique for ARYZE. It's best in class compared to any stablecoin and Web3 issuer in this sector. It's brilliant. So they do their monthly audits, checking the money is there, how many coins is issued, is that one-to-one. We do the same thing with euro and e-euro. We do the same thing with pound and e-pound. And we do the same thing with gold. So we now introduced gold, which is backed by physical gold, 999.9 LBMA stamped, properly held gold. This is then audited with the same auditing mechanisms to prove that 1 e-gold is equal 1 gram of physical gold. We then invented a mechanism we call reforge, which lets you take one of our coin and burn it like e-euro and use the ashes from the burn to mint $1. Then you can burn $1 and mint a gram of gold. You can burn the gold and mint something else. So it's Forex built into the fabric of the token. Like Forex, which today is a massive multi-trillion-dollar industry, is like what is daily Forex market, $7.5 trillion transfers a day. We turned the entire Forex industry into a function, right? It's a feature. This is really, really, really unique compared to any other stablecoin, which requires tons of liquidity. So basically, the way we do it, one-to-one backing, prove the auditing, and you can always convert between what you got. That's our model. Now, stepping back to your questions, what is stablecoin? How does it work? There is not a one-size-fits-all, man. It's a nightmare. It is insane how sometimes it's really good, kind of like ours. With Tether, with Circle, they do good backing. Circle does decent backing and then good backing, and ignoring the shenanigans 2 years ago where they moved like, I don't know, $5 billion over to Binance so Binance could pass an audit, and then they moved the money back again. But we don't talk about those things, no. But overall, those big ones, they're good. Also Tether, ignoring the several documentaries about the illicit activities done by Tether, but ignoring that, today they're decent. And then we see a range of less good tokens, meaning no proper solvency, nobody really knows where the money is or isn't. Oftentimes no company behind it, like foundation issued tokens where you don't have a face on it. Historically, we have seen various types of stablecoins, algorithmic, commodities backed or asset backed, and then fiat backed, right? So the algorithmics are exciting. You basically have one coin called Jack coin, and then you have another coin called Jack dollar, and then you do some logic behind the Jack dollar and the Jack coin to keep the Jack dollar at $1 if the Jack coin holds. And we saw many times where the Jack coin didn't hold. Oh, I shouldn't use Jack if for didn't hold. That was I should have picked another name, but you get the point. That wasn't what that was what Luna did, right? They created the Luna UST, a dollar coin, and then the Luna coin, and then that whole ecosystem collapsed, right? So that wasn't great. Then there was the crypto backed, where you basically use real crypto like Bitcoin or Ethereum or other cryptos to create mechanisms to create a dollar coin. That one I like. That one I really like. I wanna use our dollar coin to create a dollar coin, a gold coin to create a dollar coin. So we want to create like a gold-backed dollar where it keeps a dollar price, so you don't get the ups or the downs. Just keeps a dollar price, but it's backed by gold.
That's
So
how our dollars used to be many years ago, supposedly, before
yeah,
before
yeah.
they stopped. So you have talked about a little bit about the mechanisms of the stable coin for companies that are interested in stepping into this, or governments, that type of thing. In terms of approaching you, or using the stablecoin concept, what do they need to know?
They need to know that it's the next natural step in money and finance,
Hmm.
like email was to the physical mailing system. It's a natural next step. While they don't have all the answers yet, they should definitely open their ears and listen and learn. And there are people like me who can help them, and like ARYZE who can help them kind of navigate this ecosystem. What they are going to get out of it is efficiency and savings and transparency, the key pillars of blockchain, which the inventors of these technologies talked about. Uh, they need to start tapping into those, right? So it's, for example, when you look at the amount of savings for cross-border payments and remittances, the fees are still often over 7%, 7, 8, 9%. And it takes days moving money around the world. Like if I wish to send money to my family in Armenia using the banking rails, that'll be so inefficient before Danish krona becomes Armenian dram. And the world should be a smaller place with the internet. And blockchain has enabled that. And stablecoins are the bridge for regular institutions to tap into those strengths. So whether it is a municipality wanting more transparency in expenditure, whether it's a payment system for an amusement park like Disney, or a smaller one like Lego, or an even smaller one like Tivoli in Copenhagen, they they should, right? Because it enables, some people would say it's savings in cost, which it is, like 80-90% savings in cost. But it's also often like what it can do when you're in the smart money world, right? So we talked about the example of a Netflix payment coin, or a bet or a party poker coin, or something like that. This will be able to do so many cool things that you just can't do in the TradFi world. So eventually it will just be, my mom didn't start using AI because of ChatGPT. She started using AI because of Snapchat. So Snapchat came with the AI thing, and she could talk with it, and she sent me a screenshot. Oh, I'm talking with the robot, right? But that happened because OpenAI made it happen, because the technology made it happen. So the mass mainstream adoption, when my mom was going to do FX and lending, and she's going to send money to Armenia, and she's going to interface with global economies, money, finance, she will automatically use blockchain without knowing it, because the infrastructure providers that will give her the function to click send will have that. And the ones that don't incorporate it, they're either losing out and will be losing out for a long time. Like if you're a government, you don't go bankrupt, but you can really just tread waters and waste taxpayer money for a long time. You shouldn't, but you can. But if you're a company, a non-governmental company, you will go away. Some other concept will come out of the blue, like Revolut did with a neo bank, and then a bank, and then the best bank, and then I love Revolut, right? Where did those guys come from, right? Yeah, exactly. They came from the new world. And so play the game or step out the court, you know? And there are people like ARYZE who can really help you navigate these ever-changing waters. There's people like you, Jackie, and the BLI that can help navigate these um, opportunities, capabilities. Um, yeah.
So if they were interested in exploring this, they would contact you for sure. What's the time frame for having a stable coin possibly created that can support a company or government, that type of thing? I know there's a lot of different pieces involved here, but.
Well, we support today more than 20 different blockchains across 4 or 5 different currencies. And within those, which gives a lot of opportunities, within those, we have created almost all the coins for our clients in less than a week. And
Wow.
that's because of well, it takes 10 years to become an overnight success, right? So the reason that it's so fast now, it's because of the relationship with the auditor, the established back-end infrastructure for the treasury, the existing token smart contracts, the reforge which works, right? So what we say is we just need the thing that takes the longest now is getting the damn logo from the clients, because that takes the longest. And when we have the logo and the ticker name, we create it as one of our coins, which is already fabricated, right? Anything novel can take longer. So recently we saw a big spike in interest from TradFi, which meant that we partnered up with Concordium, and that's a novel chain. It's not an EVM Ethereum based blockchain, but because the client value is so vast from the clients that are building on Concordium, we just needed to support that. So that for us took a little bit longer. The scoping takes a few sessions, and then we have a very good understanding of the challenges that the person we speak with are facing. And since I've been in the game for 10 years personally, I have seen most concepts and most failures and many successes, so I can help navigate these ever-changing waters, right?
So we have different countries like the U.S., which are about to pass, a stablecoin law and other crypto laws, and there are other communities that have passed legislation. Do you see that as a hindrance, or from your looking at the laws and the things that are being passed? What's your view about what's going on currently?
I don't think it's a hindrance. I think it is a nuisance, an annoyance for the involved engineers and the involved kind of infrastructure layer, but it is an essential part of making these technologies implemented in the real world.
Mhm.
Kind of like GDPR and the right to be forgotten in the EU. Yeah, sure, it's annoying, but it's okay, when you work around it, and eventually you're allowed to do stuff for the masses in a proper way. So also remember that regulation is changing. So
Oh,
now we are seeing MiCA in Europe, markets in crypto assets, and the way that it is unfolding, it's kind of different from EU member state to member state. It's not the exact clone of the exact same implementation. Some are faster, some are slower, some are more careful, but just having a coherent regulatory attitude, I think it's healthy, and then we will see how it evolves. There is stuff being done which is weird, where when you really dig into it, it's like, God, that's annoying. Like MiCA has some requirements that you need to keep fiat readily available for redemptions, let's say in a bank, for example. Well, then on that portion, you're not going to earn money. You're not going to be able to invest it in bonds and then earn a yield on that, for example. So you got to steer around those things, right? In the US, they have a different pro crypto, pro stablecoin attitude, but in fact, it is just we just cemented that USDC and USDT and all these are basically Fed coins. So it's basically a way to position the US dollar as the liquidity source for stable coins in Web3, which basically means creating more bonds, increasing debt by getting people to buy into stable coins, which it's I don't think, I'm not an economist. I'm glad I'm not, but I don't think it's a healthy progression of how I like our model way better. the burning and minting. It's logical. It's like the IOU, you owe me system.
So what would be the takeaways that you would like individuals who are listening about stablecoin to remember, and especially for companies that would like to maybe explore this, what would you like them to be thinking about?
Stablecoins is an expression which we all use, but it's not just one thing. Remember when we talked, everybody was saying NFTs is as if it was one thing. So just forget all that and just think of it as Web3 or blockchain, right? As a company, it's about time that you understand what blockchain can do for you, right? It's a massive industry that's been exploding for a decade, right? You gotta know, like AI, you must understand what AI can do for your company. You can't just ignore it as if it's not happening. So AI and Web3, these are the two two segments that are most important for, I would say, 99% of companies. Some technologies like biotech and stuff, fascinating, but maybe not relevant if you are, a certain type of company. Blockchain is super versatile, and artificial intelligence is super versatile. Stable coins is just the real money part of it, wherever real money comes in, right? It's a component of what you should do if you are a, supermarket chain, or if you are a shipping company, whatever, whoever the listener is. Forget stablecoins. Think of this as a brand new series of technologies and what it can do for you. Stablecoins is the payment part.
So for everyone who's listening, definitely I will have the contact information for Jack and ARYZE within the blog below. And if you've heard, about the ARYZE from this conversation, definitely let Jack and his team know that, because we're trying to.
You'll get VIP treatment. You'll get extra VIP treatment.
We're trying to track everyone's knowledge and who's listening. So we would definitely want to know, especially if we're helping you. We definitely want to do a follow-up story to share your journey in the stablecoin community. Like you said, are you on the lake? And we'd like to share about your boat. So for everyone else who is listening, we appreciate you. Reach out because we want to share your story for sure. And everyone have a wonderful day, and we will see what the crypto week brings to us this week, in terms of the news and everything else that's going on in the world. So everyone have a great day. Thank you, Jack. Bye-bye.
Thank you.